If you truly want consistency in forex trading, then this video is for you. I'm going to show you exactly what a trading plan is, why every profitable trader has one, and how you can create your own trading plan. What's up, traders? Welcome back to Trading and Force. On this channel, we make trading simple and profitable. If you enjoy forex education, smart money concepts, price action, and trading psychology, make sure you subscribe and turn on the notification bell so you never miss any valuable content. What is a trading plan? A trading plan is a simple set of rules and guidelines that tells you when to enter trades, when to exit trades, how much to risk per trade, and how to manage your emotions. With a trading plan, you will know how to enter trades, you will know when to exit a trade, and you will know how much to risk per trade. You also know your risk to reward ratio, and you will also know how to manage your emotions during trade. Think of a trading plan as a business plan. Professional traders do not trade emotionally. They follow systems, they follow structure, and they are very disciplined. If you really want to be successful as a forex trader, without trading plan, trading becomes gambling. Now, let me tell you why most traders fail. Here is the problem with most beginner traders. They wake up, they open their charts, and they start looking for random trades. No structure, no risk management, no patience. Just one trade goes against them, then emotion takes over. They revenge trade, they overtrade, and eventually blow their account. This is why trading plan is very important. Your trading plan protects you from emotional decisions. Now let me tell you what a good trading plan should have. The first thing your trading plan needs is your trading goal. You have to ask yourself as a trader, why am I trading? You must be able to answer this question. Why am I trading? Why are you trading? Why do you want to take a trade? Why do you want to buy? Why do you want to sell? And your goal must be realistic. You must have a realistic goal. Forex is not a get rich quick scheme. You cannot have an account of $10 and you want to flip it in a day to $10,000. It's not possible. It's not possible. This is not a realistic goal. You can't have an account balance of $10 and you want to flip it to $10,000 in a day, from $10 to $10,000 in a day. It is not a realistic goal. So you must have a realistic goal. Your trading plan must have a realistic goal. Examples of realistic goal: becoming consistently profitable is a realistic goal. Growing your account steadily. You have an account of $10 and you want to grow it to $40. This is a realistic goal. You have an account of $40 and you want to grow it to $100, let's say in 2 weeks. This is a realistic goal. Or you have an account of, let's say, $100. You have a $100 account and you want to grow it gradually to $200 in a month. This is a realistic goal. So your goal should be realistic. As a forex trader, you must set or have realistic goal. Learning discipline in trading is a realistic goal. Learning discipline in trading is a very realistic goal. Improving your risk management is a realistic goal. Your trading plan must have a trading goal, and your trading goal should be realistic. The next thing a good trading plan should have is your trading style. You must know your trading style as a trader, whether as a professional trader or as a beginner trader. You must know your trading style. Are you a scalper? Are you a day trader? Are you a swing trader? It is very important. You must know your trading style. A scalper is a trader that enters the market, holds the trade within minutes or like a couple of hours and come out and exits the trade. A day trader is a trader that holds a trade for a full day, and a swing trader holds a trade for a month, for weeks and even months. Trading style is important because every style requires different strategies and patience level. Every trading style requires different strategies and patience level. The next thing a good trading plan should have is your trading section. One mistake beginner traders make is trading all day. No, you don't do that. Professional traders focus on specific sections. For example, we have the London section, we have the New York section, we have the London and New York overlap. There are 4 market sections in forex trading. We have the Asian section, we have the London section, we have the New York section, and we have the Australian section. So as a beginner trader, you must know your trading section, and your trading plan must contain your trading section. Let me tell you this, trading during high volume section gives better opportunities. I will be telling you mostly about my own personal experience over the years I've been a forex trader. I trade only the London section and the New York section because these sections have very high volume. I call them the high volume sections. When you trade during this London and New York section, especially when they overlap, when they meet each other, you have better trading opportunities. So a good trading plan must have a trading section. The next thing a good trading plan must have is your currency pair. You must know your currency pair. You also need to decide which currency pairs you will focus on. Do not trade everything in the market. Don't trade all the pairs. You are going to decide which currency pair you are going to trade on. Choose a few pairs and master them. When I started, I was trading only GBP USD and Euro USD when I started. But I'm not advising you to stick to one currency. No, I don't belong to that school of thought. Do not stick to one currency. But if you want to stick to one currency, fine, it's good. But you can take 2, 3 to 4 currency pair as a beginner. Yes, as a beginner. For example, you can take Euro USD. You can decide to take GBP USD, AUD USD. Even these 3, they are enough. Start with these 3. Start with these 3. Do not trade everything in the market. You must choose a few currency pair and master them. You can start with 3. You can start with 4, but do not exceed 4 currency pair as a beginner so that you can master them. Why you have to master currency pair is this: the more familiar you become with a pair, the better your understanding becomes. Don't trade all the pairs as a beginner. Choose 1, choose 2, choose 3, choose 4, but do not, as a beginner, exceed 4 currency pairs. Please don't. I don't belong to that school of thought that says create only 1 currency pair. Because if you stick to 1 currency, you can spend a week without having a very good setup. The next thing a good trading plan should have is entry rules. This is one of the most important parts of your trading plan. You must have an entry rule. Your entry rules must be clear. You must have an entry rule, and your entry rules must be clear. You should know exactly 4 things. What setup you trade? What do you see when I mean by setup? Before you take a trade, before you buy or before you sell, you must have that rule. Number 2, what confirmations you need and when to enter. Your entry rules must be clear. You should know exactly what setup you trade, what confirmations you need, and when to enter. I'll use myself for example. I only enter after change of character, after pullback into an order block, or fair value gap, or supply zone, or demand zone. That's when I enter. When I see a bullish engulfing or a bearish engulfing, that's when I enter. Your entry rules take away the fear of missing out. The next thing a good trading plan must have is risk management rules. Now, this is the part many traders ignore. Risk management rule. This is the part many traders ignore. Risk management. A good trader protects capital first. There's one thing I can guarantee you in trading. I can guarantee you that you will lose money. It's the truth. I can guarantee you that you will lose money, especially as a beginner trader. What I cannot guarantee you is you will make profit. It's the truth. So a good trader learns how to protect his capital first. You must learn how to protect your capital first, and protecting your capital is risk management. So your trading plan must have your risk management rules. Your trading plan should define how much you risk per trade, how much you are willing to risk per trade. Your risk management rules should have your risk to reward ratio. How much you want to make from every trade? So you must have this rule in place. For example, I risk 1% per trade. Minimum of 1:2 risk to reward ratio, and maximum 3 losses per trade. If I open my chart, I take the first trade, it hits my stop loss. I take the second one, I'm in a loss. I take the third one, it hits my stop loss again. For that day, I close my chart, I leave the system entirely. Maximum 3 trades, I stop. Whether it is a win or a loss, I stop. I don't take more than 3 trades to avoid overtrading. I stop. These rules protect your account. The next thing a good trading plan should have is exit rule. You must know when to exit the market, when to close the trade, or when to open the trade. Where will you take your profits? You must know where to take your profit. You must know when to cut your losses. Never enter a trade without knowing your exit plan. You must know your exit plan. You must have clear exit rules. The next thing your trading plan must have is psychology rule. Trading psychology is extremely important. Your trading plan should include emotional rules like no revenge trading. Let's say, for example, you took 3 trades and you lost the whole trade, and you took another 3 again, you lost all of them, and now you have lost a total of 6 trades. Now many traders, what they do is this: instead of them to close the chart or even shut down their laptop, then look for something else and do aside trading, they go for revenge trading, where they want to cover all these losses. And the more you keep trading for that day, because your psychology is not right, you keep incurring more losses upon losses. From 6 it will get to 16, from 16 it will get to 26 losses in a day. Just imagine when you are incurring 26 losses on your account in a day. You have to stop. No revenge trading. So your trading plan should include emotional rules like no revenge trading, no emotional entry. Let's say you are seeing the market is rising, printing higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, in that order. Instead of you to wait and enter based on your rules, you say, this market is leaving me behind, I have to jump in. That's what we call fear of missing out. The moment you enter, now take for example, this market has risen to this extent and you decide to enter from here, you decide to take your trade here, that's when the market will come down, go this way, come down again, go this way, and hit your stop loss because you did not follow your entry rule. So your trading plan should include emotional rules like no revenge trading, no emotional entries, no over trading. Follow the plan strictly. Discipline is what separates profitable traders from losing traders. Discipline is what keeps beginner traders and advanced or professional traders apart. Is what separates them. Discipline, nothing else again. Because the strategy they are using, most of us have better strategies, but what makes us keep losing and losing and losing is discipline. We lack discipline to follow our trading plan. Once you lack discipline of following your trading plan, you will keep making losses upon losses in the forex market. The market rewards discipline, it rewards knowledge. Don't forget, it rewards discipline and it rewards knowledge. So this is just a summary of all what we have been talking about, of what a good trading plan should have. You can copy it. One thing about forex is this: you take small from A, take from B, take from C, take from D, then form your own. That's all about forex trading. A good trading plan should have your trading style, your trading section, your currency pair, your setup. What are the confirmations you see? Is it a pin bar? Is it an engulfing bar? Is it an order block? Supply and demand, support and resistance, change of character, break of structure. What is the setup before entering? Your risk per trade and the risk to reward ratio. When I say risk to reward ratio, if you are risking $50 per trade, how much do you want to make? If you are risking $50, how much do you want to make if you are risking $50? Me, I always go for risk to reward of 1:2. So if I'm risking $50, I want to make $100. If I'm risking $100, I want to make $200. If I'm risking $300, I want to make $600. So My risk to reward ratio is 1:2. Some traders do 1:3, some do 1:3, 1:4, 1:5. But ask yourself, which one is more realistic? Is it 1:2, or 1:3, or 1:4, or 1:5? To me, from my years of experience, 1:2 is very realistic. I am not a greedy trader. Trading, you don't just get rich overnight. In trading, you don't get rich overnight. You get rich with time. So risk to reward of 1:2, I'm risking $5 to make 10, or I'm risking $1,000 to make $2,000. I am very okay and satisfied, and I have been very profitable. If you are going for 1:3 risk to reward ratio, what it means is that if you are risking $100, you want to make $300, not 200. If you are risking $50, you want to make $150. Risk to reward ratio of 1:4 is, what it means is this: if you are risking $100, you want to make $400. Yes. If you are risking $1, you want to make $4. Beginner traders, stick to 1:2. You will still be profitable. You will still be very profitable. 1:2 is okay. So a good trading plan, in summary, should have a trading style, should have your trading section, your currency pair, your setup, the risk per trade, the risk to reward ratio. You should have daily rules, maximum of 2 trades per day. But me, I take maximum of 3 trades per day. I don't take, even till now, I don't take more than 3 trades. Once I take 3 trades, whether they're in losses or in profit, I stop for that day. I don't take more than 3 trades per day. And we have 5 days to trade. A good trading plan should have psychology rule. No trading after emotional losses. The psychological rule prevents you from emotional losses. So you can take it, incorporate it into your own, take some, or you can even use the whole trading plan. This is what I use on a daily basis. This is my trading plan. Some benefits of having a trading plan. These are the benefits of having a trading plan. When you have a trading plan, you become more disciplined. You become more disciplined when you have a trading plan. When you have a trading plan, your emotions reduce. You just set your trade and forget it. There's what we call set and forget. You set, go and sleep, because you know your risk management. If this trade goes against me, maximum I will lose is $5. And if this trade goes in my favor, maximum I will make is $15. So when you have a good trading plan, your confidence improves. You are not scared, because you are following order, you are following set of rules. You have a plan. When you have a good trading plan, your consistency increases. You become more consistent when you have a good trading plan, because a good trading plan helps you think like a professional. Only thing that prevents you from gambling, because you have data, you have a plan that you stick to. My final advice is this to every trader watching this video: stop chasing random trades. Build a strong plan and follow it consistently. You must build a strong plan and follow it consistently. Remember, strategy alone will not make you profitable. Discipline, patience, and structure are what creates long-term success in forex trading. This channel has a lot of videos on structure, so go over, watch all those videos, learn how to map structure, study them. It will help you as a beginner trader. It will help you a lot. I will leave a link in this video's description, so it will be easy for you to access those videos on the channel. You must be disciplined, you must be patient, and you must follow structure. The structure is your friend. You must understand structure, how the market moves. If you've got value from this video, make sure you smash the like button and subscribe to Trading Infos. If you want more videos on trading psychology, risk management, smart money concepts, and price action, let me know in the comments. Thanks for watching, and I'll see you in the next video.